Howdy, y'all. This is Thomas. We're going to today take a look at North Shore Global Uranium Mining ETF and check out some of their holdings and compare it to the URA ticker, the other ETF that we covered on our last video. So this ticker here is URNM, and they have 35 holdings. This is a newer ETF in comparison to the URA. So their track record isn't as long, but they definitely have some success, and some investors on the the more seasoned uranium investors seem to prefer this one. So I wanted to take a closer look at both of them and try to understand what the difference was, and why one could be preferred over the other, and if there was a value discrepancy. Or so that's what we're looking into today, is trying to understand a little bit deeper on the holdings and the percentages, and if that's favorable or should be balanced with the other ETFs, and of course the straight stock picking, buying into a company, the equity into a company. So the first company here is Cameco, big Australian, which the geopolitics is clearly important in today's environment. So they do have that is their biggest holding here. Gives them liquidity and access to uranium stockpiles and future production of uranium. Next on the list is an interesting Kazatomprom, and this is again a big portion. It's the second largest holding at just under 13%, and they're definitely trading in the oversold RSI as the the ties between the Kazakhstan government and Russian government have become more covered more in the sector by the investing, marketing in the sector, and just the people providing information. So that has Kazatomprom didn't rise with the rest of the energy's price surge, but I recently came across an interview with one of the head honchos of Kazatomprom, and he was mentioning that they're still doing their shipment through St. Petersburg, but they do have alternative ship routes. So that could be bringing the entire ETF down, because it is a large holding there. But if things resolve peacefully, we could see the Kazatomprom be repriced and definitely move up. So that could be a big catalyst to keep your eyes on. And I know everybody, it's not easy to invest in Kazatomprom directly. So these ETFs gives you a chance to get some of that exposure to that company, which is the largest uranium producer. And so we have a Sprott Physical Uranium Trust. Something I just reminded, popped in my head, was that 20% of Kazatoprom's mining production is tied in with Russian companies. So if is on Russian land. So if that heads, if tensions continue to rise and Kazatomprom receives secondary sanctions, that could be harmful for the long-term ETF, performance or of the Kazatomprom, um, but could be good for obviously the competitors. So that should balance itself out. Be interesting to see if they're if the ETFs would be looking to sell some shares and reallocate the capital to the positive swap line nations. Uh, Next on the list is the Sprott Physical Uranium Trust. Um, so that's a direct play for uranium because let this big trucker go by, logger. So the Spot Physical Uranium Trust buys and holds uranium, and so does Yellowcake here, and that's something that I learned studying this ETF here. Um, was that they wanted to keep a 15% exposure to the commodity itself, and they're going to do that through the Sprott Physical Uranium and the Yellowcake. So that's interesting to know. So that's positive for both Spot Physical and the Yellowcake here, and Energy Fuels definitely had a good day today. While the other uraniums had a pretty soft day. So they're definitely priced a little bit higher than the UEC, um, but they are providing value, and they are so they are pretty high up there. Uh, I see they're relatively balanced with UEC, and this next gen has a great discovery. Um, so we'll be interested to see what they can do with the remote location of that discovery, and if they're able to be either acquired or really develop that out to a long term project. These are some the and it's interesting because these are the North American companies here, so that have a bigger percentage of the ETF. So I do like that. I feel like that gives them a little bit more um, stability um, in terms of sanctions as energy and really just politics continues to become national focused. We'll I think the U.S. and Canada uranium ties will continue to grow, and we'll see what happens with the Australians as well. Oh, I kind of scrolled down a little bit too far. Get back up here. They have definitely some good companies. This CGN is the China General Nuclear, and so they have a little over 3% in the portfolio, and that's good because they are a major buyer of uranium and could become the distributors of the Kazatomprom uh, uranium if the St. Petersburg route is closed. So that's something to keep in attention to. They did have some scuffle with Great Britain, CGN, and Great Britain have some competitiveness happening where the government doesn't want CGN to have so much stake in the nuclear development of Great Britain. So that's something to keep our eyes on as well. That's interesting news. So we'll see if CGN gets blacklisted and how that affects the price of the ETF. But if you are looking to get some exposure into a emerging market that has committed itself to purchasing and producing a lot of uranium, CGN is I believe worth the risk. So these are some, yeah, we've covered some of these. We'll have to continue to look into it. I'm not gonna do the full deep dive here. It's getting a little tardy, but we'll continue to look into these. And some of these are some of the smaller holdings, a little bit more riskier plays. So, but it is nice um, to get some exposure to the upside, because these are more pure mining plays. So it's definitely worth some allocation. And if you're interested, I would do my own due diligence. Alrighty, phone. And yeah, so take a look at that and tell me what y'all think. Hope y'all enjoy that.